All right, good morning, guys. Today is June 14th, and as usual, we'll be going over analysis for US 30, gold, and EU. So currently, I'm in a US 30 sell, this one based off of the hourly time frame. The reason I've entered that trade, so I'm big on trend lines, right? So you can see this trend line on the hourly that's been sticking and holding for US 30, which is why I'd also taken a buy on US 30 here. But I remember for this buy, we went out at break even because this candle came back up. By anybody who held, they would have been in profit. The reason I entered this sell on you, I've been waiting on a sell for US 30. So the reason I entered this, I actually saw price, and this is how you know your trend lines are valid. When you see price sticking to your trend lines, that's how you know your trend lines are valid. So US 30 yesterday during the Asia session opened with a gap down and literally retested the same trend line. And for the next few hours, price stayed on that trend line. So this morning when I saw this hourly candle coming towards the trend line, what I wanted to see was an hourly candle close below this trend line on the hourly, and then a retest, either a retest of the trend line or a retest of the 9 EMA on the hourly and closure below, which we received at 9, like an hour ago. So that's when I went ahead and entered a sell on US 30. And even at that point, even looking at the markups we had, as much as we were in a buy zone, like demand zone, the buyers really didn't have any order blocks to take price up. So as much as you can see these supply and demand zones, what you want to see is, for example, here for a buy, you would have wanted to see maybe an hourly or 4-hour bullish order block. At that point, I would have been cautious of this sell. But right now, like this, supply and demand zones, they really did not make me not take the sell on US 30. So the other part, let me see what else. So yeah, I'm in that trade. I'm also in a gold buy based on the reversal indicator from yesterday. So I'm not sure we're going to take any, again, like I did mention that we're probably, our live sessions are probably not going to be as long anymore. It's mostly going to be questions for you guys. But here for the reversal indicator, give me one quick second. I have to check on something.
So when's the next valid sell on US 30? Wait for the death cross?
Wait, give me 1 second.
No worries.
All right. So for this gold, and I'll go over your question for US 30. So for this gold, the reason first I entered this gold buy on US 30. So yesterday, for those of you who are on the live session, I entered a buy on US 30 after news. So I was testing out the, what is it called? The the news pattern that I normally trade. I think it's, where's whatever it's here. So the news pattern. So this was FOM. This was CPI. So during, and I knew the risk for this trade, but this is the news pattern I normally look for, and it's highly probable on NFP and FOMC like today. So the FOMC meeting that has a conference, not just the FOMC that only has the rates release. So there's two sorts of FOMC. So there's one FOMC that, let me go over that real quick. So the FOMCs that have the rates release at 2 p.m. and then the conference at 2:30. So at 2:30, the chairman of the Fed, who right now is Powell, Jerome Powell, he normally talks about what's, what they released at 2 p.m. On the other hand, there's FOMCs that don't have the conference. So for those ones, I really don't care about them because normally it's just a lot of chop or manipulation. So this pattern that I took the gold buy on yesterday, normally during FOMC like today or NFP, you normally wait for the first 5-minute news candle. If it's a bullish candle like was yesterday, I know this was CPI, I would then look to short the next 5-minute candle, or I would normally expect a retracement. And then if that does happen, let me redraw this. If that does happen, after that confirmation, I would then look to buy gold or whatever instrument and continue to the move that was created by the news candle. So yesterday I did, I think it was Audrey and I, so we bought gold on this candle, but because I was aware of the risk, because this strategy, the news strategy is not doesn't have a high win rate with CPI and PPI. So I actually used a 200 pip stop loss for gold because I was like, if they really take me out of a 200 pip stop, like, okay, at that point, I was just meant to get taken out. So when I got taken out of this, I realized what they actually created a trend on gold. So this is a downtrend. So you have an area of interest, 1965 area. You have the trend continue. All I did, I really did, I just said I'm going to wait for a buy signal on the reversal indicator. So as soon as I got that first buy signal, I re-entered, and this trade I'm in with a heavy lot size. So I'm looking to make, I've already made back the loss from yesterday. I'm just looking to make a bit more profit. So yeah, that's how I did that entry on gold. US 30, I went over the sell. Now, I know, Marcus, you asked when is the next valid entry on US 30. So we do have, if like using the breakout, like nowadays, right, I just use my indicators. There's no need for me to stress myself out. So we have a sell on the breakout indicator on US 30. So this is one valid entry. The only red flag for today, as usual, is FOMC, but there's already a valid sell entry that already went like 90 pips in profit or something. So normally, because nowadays I take 100 pips TP and stop loss for US 30. So there is a sell based on the breakout strategy. However, for me, the major sell I'm waiting on US 30 is this, and hopefully we might get it during the live session, is using the crosses indicator. So again, if you have the crosses indicator I mentioned, take the first 4 or so trades after the original cross. So this right here, I wouldn't be taking buys for US 30 based on the crosses indicator at this point. And if I'm going to take them, I'm going to exit when I get this exit yellow arrows. So I am waiting. So this is the major sell I'm waiting on. But since I'm already in a sell on US 30, not sure I'm going to take it. The only red flag for this trade, it's going to be valid because we haven't had a death cross, and this is on the 15-minute time frame. So all this, I went over this yesterday. If you took every single one of these buys, I think this was yesterday, there were 24 entries, you'd have a 98% win rate, and you could have easily passed phase one by using a 0.5% risk. But anyway, if you look at the last time we had a death cross on US 30, this was June 7th. So this was a week ago. And they faked it out. So they did a death cross. However, price went back up. Also, this was after a lot of consolidation and after a heavy, I think this was during NFP, after a heavy move to the upside. So let's just count how many death crosses have been valid. So this is the first golden cross that came up, and this was right here, this was NFP. So pushed price heavily up. During this consolidation, this is when I was in heavy sells. I was in like 3 sells with 50 lots each. And then I took, for this trade, I got taken out at break even, if I remember, because I saw a lot of consolidation. So when a cross is happening, you don't want to see this. You literally don't want to see this. And also that's why in this indicator, I have a squeeze filter. So if you apply the squeeze filter, guess what? All of these entries get taken out. So let's just play with the squeeze filter for now. So with the squeeze filter, On this one, you could have gotten just one buy, even though without the squeeze filter, you could have gotten other buys. But the squeeze filter will protect you from all this manipulation and consolidation. Okay, so we had a golden cross there. Here we had a death cross somehow, but right, it was invalid because price was squeezing. Then we had a death cross here. So this was a valid death cross because after, and this for me, I got actually stopped out of this trade because I entered because I was like, for this one, I did use the squeeze filter. And then I was just waiting for a valid sell where price was going to sell or form a death cross without having to consolidate. So I did enter this sell, but I got stopped out. But for this one, at this point, got stopped out. If I got stopped out of this trade, then I knew if they take price back up, they were just trying to trap sellers. So this is the area to look out for. So they've been trying to sell US 30 from around 33,500. So what happened after 33,500? After 33,500, if I take off the squeeze filter, they created this golden cross to the upside, which actually hit TP. And from then on, each and every buy hit TP other than the one yesterday that got manipulated during news. So this is why this death cross right now is what I'm observing to use. And for me, with this trade, if I'm still going to be in this sell, I'll just weigh the pros and cons. But this is one of the trades this sell right here. When we get a sell here, this is the sell I was looking to take with like a 3% risk. So I'll just hold. And with a 3% risk, right, you can literally use a 3% risk. And because 3% is 3,000 on a 100K account, right? So I can do 50 TP and 50 stop loss, right? But you can see that is very close. I mean, even when that does come up. So that is a very small range for US 30. Okay. You can still use a 3% risk and literally use a 500 pip stop loss, 500 pip TP on US 30. Now, the best thing with this trade, and for me, for this trade is highly likely. It's like a 90% win rate. However, the question will be, what TP and what stop loss will help you achieve that move? So that might be a bit high. So what about 200 pip TP, 200 pip stop loss? Would that be able to save you from any manipulation? To me, yes, this makes sense. So this trade might take a day or two to hit. And let me make sure I'm using the same. No, actually, wait, give me 1 second. No. 34. Oh, my bad. I forgot US 30 is not like FX pairs. Yeah, because that is high. Okay, yeah, 200 pip TP, 200 pip stop loss. So for this trade, if you're going to use like a 3% risk or 2% risk, make sure your stop loss is above the previous swing high. So this is what I was talking about. Like we can do a 500 pip TP and 500 pip stop loss. So let me ask you this question. If this trade, to me, it has a 90% win rate. So whatever risk I'm going to use is going to be at least 1%. So ask yourself, if it has a 90% win rate and you know we have FOMC at 2 p.m., where are you more than likely to get faked out? You can still use a 3% risk with 500 pip TP, 500 pip stop loss, or use a 3% risk with 50 pips TP, 50 pips stop loss. So the question is, how far off are you bound to get taken out? So that's the question. So either way, I'm going to take this sell on US 30. I would advise you guys to take it too when the sell signal does appear right here with the crosses indicator. Hopefully we get it right now. The only red flag is if we get it before FOMC, that might be a bit of a risk, which is why for me, I advise you guys just use a higher stop loss or TP. And that's how I'm able to make all this, like this gold trade. I entered yesterday, with actually for this trade, I'm going for a 2%. I'm already up like 3%, 1.5%. So this is the importance of, if you're still struggling with taking trades and you're scared about hitting stop loss, use the same amount of risk, but take double your TP, double your stop loss, or triple your TP and triple your stop loss. The only caveat to this trade, the best thing about it is it's going to move you from being a scalper to an intraday trader or intraday trader, whatever it's called. So the key thing about using such a setup, whether you're going to use, but make sure you use at least a 1:1 risk to reward. The best thing about this is it makes trading less stressful for you, and you can easily make 3% in like a day or two. The worst thing about this, how you can mess up this setup that I'm giving you guys by doubling your TP and stop loss is, let's say trade comes in, you get taken into the trade, and that's why you guys are seeing for this US 30 trade, I'm still in this trade. I'm not going to close this trade out. The worst thing you can do for yourself using this entry strategy is, let's say you get tapped in. Remember, we have a 90% chance of this trade going straight to TP. Might take a day, might take 2 days, but we have a 90% chance. The worst thing you can do for this strategy is you get tapped in, then you're up like what, maybe 100 pips. So trade comes in 100 pips, and guess what? You go ahead and exit this trade early. Okay, then maybe you say, I mean, you're going to secure a good amount of money. You're going to probably secure like 1.5%. So then next time, God forbid, something like this happens, we identify the same trade and we get tapped in, maybe some profit, and then guess what? The trade goes and hits stop loss. So remember, this is a 1:1 risk to reward, which means if you lose one trade, you need another winning trade to go to break even. But if for the previous trade you exited early, and ideally this one would have been a negative risk to reward, because you'd have been risking 1.5%, or let's just say 1%, and you got out at 0.5%. If you lost the next trade, you would literally need 2 more of this winning trades. So identify your risk to reward, make sure it's at least 1:1, and then let TP hit, let stop loss hit. At the very least, for me, for this trade, and I went over this yesterday, I know I used to say that let's set break even if we are 50% in profit. Nowadays, let set break even when you're at least a 1:1 risk to reward. Don't set break even when you're at 50%, because overall that will just mess up your returns. So for this particular strategy, make sure at the very least set break even when you've already achieved 1:1, and then you can do whatever you want after that. So for me, my strategy with this particular entry, and for me, I use a 1:1. Other people use 1:2 or whatever, but you can adjust it to fit those strategies. So just make sure, let TP hit. Don't close early. Like right now on one of my accounts for gold, I'm up this gold trade. I entered with two accounts. On one account, I'm up 3K. On another account, I'm up 4K. I'm still in this gold trade because I understand the risk to reward for this. I understand the probability for this one. Now for this particular one, since I've already gotten my losses from yesterday, I can close this trade early, because ideally I've already gotten, because for this particular trade, I'm actually going for a 200 pip TP and stop loss. And normally I go for 100 pips TP and stop loss for gold. So for me right now, I can afford to close this trade because I'm already at break even if you count for yesterday. So at most, what I was trying to achieve with this trade is get back my loss from yesterday, because yesterday I did a 1% risk. Today I'm doing a 2% risk. So at 1955, I'm already back at break even because I've gotten back my 1%. So right now what I'm going for is like that other 1% that I could have gained yesterday. But for this particular one, I can afford to close this trade early, if that makes sense. So right now, honestly, this is the only trade I'm waiting for. Hopefully we get it during the live session. If not, this is a trade I'll be looking at, but I'm already in a sell for US 30. Yeah. If anybody has any questions, again, I said nowadays the live sessions are not going to be as long because I normally send out trades before even the New York session. So
Michael, I have a quick question.
Mhm.
I saw you play with the GA Trading Club crosses and the zone. What time frame did you using to get into a trade? Because I saw you say the buy came yesterday for gold.
For gold.
And yeah, that was I guess that was in the 5 minute. And
Yeah.
when you explained the trading zone, you switch to a 15 minutes. So what time frame do you usually use for both of them?
Okay, so for gold, let me just do this on gold. Okay, gold, the buy I took, so this is the one we got stopped out. Okay, perfect. So this is how I use the crosses and what. Okay, so let me bring this back right here. What am I looking for? Okay, let me put this right here. Okay, so this is my process of taking a trade. So number one, if I'm going to take a trade, I need to know is a trade valid or not. So how do you know a trade is valid? You know a trade is valid for me using using any of my strategies. So what strategies do we have? We have the reversal strategy. We have the breakout scanner strategy or breakout strategy. We have the crosses strategy, and we have the, what other strategy am I missing? I think it's those. Yeah. Yeah, I think it's mostly 3. I think I'm missing some, but those are the 3 major ones that right now I'm dialed into. Okay. So yesterday on the gold trade, I knew that, okay, we got stopped out of this gold trade using a 200 pip stop loss, like a $20 move. So when we got stopped out, just by looking at the 5 minutes. So, okay, number one, all my entries will always be on the 5 minute. That's all my charts. That's why I have on the right 5-minute chart, 1 hour chart on the right. I'll explain when the 15-minute come in. But generically, my entries are normally on the 5 minute. Okay, so we got stopped out. I identified, obviously, automatically, this was a trend on US 30. Okay, so if I knew that that was a trend, what strategy will give me an entry on on gold? What strategy would have given me an entry? The strategy that aligned with me or stood out was the reversal strategy. So at that point, I haven't even looked at the zones or markups indicator. So at that point, I would come in and then go to the reversal strategy, the reversal indicator on gold, and then come in here. I was looking to buy, so I do buys only. So this right here should be 50 for gold, 30 for FX pairs. This right here should be close on the 5 minute. This should be 1. Okay, I'd go ahead and do that. So, and then I wait for that buy signal. So here we got a buy. So requirement number one has been validated. Is the trade valid or not? Okay, I already got my entry. So I got my buy entry. So I come in. So this is how I use the crosses, the markups and the zones indicator. So let me turn off all this let me turn off the high, low, and trend. So the zones indicator gives you supply and demand areas. So think of them as buy. I don't like using the word buy and sell areas, but think of that. So demand is where buyers are sitting. Supply is where sellers are sitting. So if I got a buy here, I think our buy was where, somewhere here. This was probably that buy. I might be missing, but I'm guessing it's somewhere here. And we did this. Okay. So if I was getting into a buy here, what would I have wanted to see? I wouldn't have wanted to see any supply zones here. So if I was getting into a buy here using the zones indicator, all I want to see is green. Now, the green, I'm never going to use the green alone just to buy or sell. Remember, my first confluence of getting into a trade is if the trade is valid or not based on a strategy. The zones indicator is not a strategy. It's just a place to tell you, hey, we have buyers here. Hey, we have sellers here. If you get a buy entry, of course, you want to see we have buyers there. Okay, so that's the zone. That's how to use the zones indicator. So number 2, the markups indicator. What does the markups indicator show you? The markups indicator will show you order blocks. We'll show you order blocks. So like the bullish and bearish order blocks. We'll show you the weekly open. We'll show you the monthly open, monthly high, and right, hourly, 4-hour, daily bullish zones. So yesterday here, we did not have any order block. So a red flag here would have been a bearish order block, mostly the 1 hour and up. So if I had like a 15-minute bearish high or low here, I would have still taken the buy. Yes, it's a red flag, but I would have still taken the buy because, again, I normally tell you guys, I don't really trade 15-minute order blocks by themselves. Also, if that confuses you, you can come in here and turn off the 15-minute order blocks if you never want to see them on your chart using that indicator. Okay, so we did not have any bullish order block and any bearish order block around that zone, but we had buyers sitting here. So for me, personally, I would have wanted to see a bullish order block, but we didn't have any. But that's better than having a bearish order block. So then I was like, okay, this trade, again, 90% win rate, no red flags whatsoever at that point. At the very least, we had this previous daily low, of course, was for the previous day. So at the very least, we had maybe the previous weekly low and previous monthly low right here. So even while entering using a stop loss, I could have easily done as instead of doing a 200 pip stop loss, guess what? I could have done like a 50 pip stop loss and made sure my stop loss is below the previous weekly low here, or the monthly low, or even just below 1932 where the previous monthly low is. And that way, like for me, I can easily have a 1:2 trades or whatnot, but I'm just by default, I just trade 1:1. Normally I know my stop loss is not gonna hit, but yeah. So if you want to even have like a 1:2, I could have easily used a 1:2 and put a stop loss at 1931, so that my stop is, or my trade is covered by this demand zone right here, by the previous at this, I think yesterday this was a monthly low or something, but then at the very least by this previous monthly low. And then at that point you go ahead and let the trade ride. So to recap, the zones is not a strategy. It should just tell you if you're entering into a buy, turn on that zones indicator, see if we're in a supply or demand zone. If you're looking to buy, hey, you want to be in a demand zone. On the other hand, right, turn on the markups indicator. If you're looking to buy, it would ideally be helpful for you to see an hourly, like for example, if I don't know how the Euro GBP trade is going. I don't know, Steven can let us know. Let me look at the Euro GBP. Oh, this is the other trade. I mean, Euro GBP is heavily in profit. So this is, let me just go. So using the same analogy for Euro GBP, this is a better example. So Euro GBP, and sometimes if you do get this error on the GA Trading Club zones indicator, I think it says study error, the study reference is too large or whatnot. So the way this indicator works, it takes in account like the last 15,000 candles or something. So if you do get this error, go ahead and go to the 15-minute time frame and you'll be able to see those zones. So let me just do that right now. So you see the zones are working right now. So today, Steven sent that in the group. That's another group I'm in. Steven sent that in the group today for Euro GBP. And Steven did mention the other day that when he says target hit, more than likely the trade is going to reverse. So yeah, so Steven literally sent this in the group. And then I remembered, I made a joke last week. I said, every time Steven is going to say target hit, I'm going to enter the opposite way. So when I saw Steven say target hit, I literally came to the Euro GBP chart. So you can see I have a chart just for the markups. It doesn't have any of the other indicators. It doesn't have the EMAs, doesn't have the high low plus trend indicator, doesn't have anything, just has the markups and the zones. So when I came in there, of course, on the 5-minute, the zones indicator wasn't loading. So I had to go to like a higher time frame, like a 15-minute, so that the zones can load. And guess what I saw? The first thing that stood out to me, we were in a heavy demand zone, number one. So green flag right there. Number two, what else do I see? We have a 4-hour bullish high and bullish low right there. We do not have any bearish zone for Euro GBP. At that point, in fact, actually, let me close out this trade. I actually entered accidentally with a 10 lot. Oh, I guess it's not heavy. Yeah, so I'm actually in this trade with a 10 lot. So to me, that's an example of how you use the zones indicator and the markups. So of course, Steven saying target hit is not a strategy, but to me it was just a joke I made last week. I said, if Steven ever says target hit, I'm going to enter the other way. So think of that. Of course, it's not a strategy. So that was item number one. Item number two, I just literally came into this chart, turned on my zones indicator, turned on my markups indicator. I saw we were in a demand zone, which you can see is right here. So I knew we have buyers here. So I knew we have buyers sitting here. And then I saw we have a 4-hour bullish high and low. We have an hourly bullish high and low. So there's no, as much as we have sellers here, so sometimes you have to also turn off like mentally some of these zones, because of course, if you see we have sellers here, as much as you're seeing a buy, sometimes you might be conflicted. Oh my God, maybe we have sellers up there. But for me, seeing that we have buyers down here, or we had buyers down here, and also seeing we had a 4-hour order block here and an hourly order block here, for me, I don't even see, subconsciously, I don't even see the red zones. So that's why I sent out that trade in the Discord. And also you can see where the TP is. So the next best area that sellers can step in for Euro GBP is 0.85850 area, because we have an hourly bearish high and low, and we also have sellers sitting there. So you need to use the markups indicator and the zones indicator in tandem. So if you have a bearish or bullish zone, you also want that zone to be in a supply or demand zone, because remember, that's what they're going to use. So right now, the sellers don't have anything to push price down on Euro GBP. The buyers right here have an 4-hour order block, bullish order block, and an hourly bullish order block. Yeah, so that's ideally how you use those two zones, if that makes sense.
Makes sense. Thank you.
Yeah. And yeah, so I would recommend just note this down or take a screenshot of this. So this 5 requirements, and I know I did record a video last week. I'll just upload it maybe today. Use this, right? Just write down these 5 things. That will help you, because sometimes, right, people wonder, okay, is this valid or is this not? If a trade is valid, just go ahead and take it. Yeah, any other questions? US 30, still no entry on US 30. So for this US 30 trade, so remember, we haven't tested this trend line yet. So it's possible that we can test this trend line before coming back down, or it's possible that it can still even go straight to loss. So, but personally, I mean, this trade, I did not secure anything. I did not set break even because I'm still confident of this trade. But the major one I'm waiting for on US 30 is this sell based off of the crosses indicator. So same thing, Audrey, with the crosses indicator, like if I get a buy, let's say I get a buy, or let's just simulate, let's assume we have a sell right now on US. Let's say we get that sell on US 30, like right now. What I would do, I would come to the US 30 chart, and then I would turn on my zones indicator and markups indicator. So what I want to see is I want to see so we do have like 15-minute bearish high there. We have 15-minute bullish low here. Again, for me, this two would just cross out. Now, unfortunately, US 30 has pumped up so hard that we do not have any high time frame order blocks based off of my zones. We probably have a bearish zones. This is just by looking at it. This is an hourly bullish bearish high, hourly bearish low here. But remember, the way people mark up order blocks is just is relative. And that's probably, so this is an hourly.
And that was a 200 pip for US 30, you said?
Yes. It's a 200 pip, the one I'm in.
How would you now? Like, I don't have any indicators, but what I was looking for, would it be a cross and then a retest of the 9 EMA?
Okay, so organically, yes. Now, that might not be the entry that's given by the indicator, but yes, if you're trading without the indicator, that would be the entry. Yeah. So for this one, so the crosses, unfortunately, right now there is no my markups indicator, even the hourly. So you can see the hourly bearish high is at 33,852 based off of my markups indicator, but we definitely have a hourly bearish high at around 34,298 and our hourly bearish low at 34,223. So right now, if we were to get that sell on US 30, what's a red flag? So I do see we're in a demand zone. So I don't want to see particularly that. But again, remember, zones for me do not invalidate a trade in any way. Zones for me are just telling me we have buyers here, we have sellers here. And also think about it this way. These buyers can be retail buyers, right? So, and you don't want to trade in the direction of retail buyers. So in any case, what I'm seeing here, because I've been waiting on this sell for US 30, what I'm seeing here, instead of these buys confusing me, guess what I'm seeing? I'm seeing during this whole move up for US 30, I'm seeing that market makers were leaving pending orders. So 34, that you see where US 30 got rejected from, like before this move back up. I'm seeing like, so keep in mind, a lot of retail traders try to sell at psychological levels at around 34,000. And guess what market makers did, which is why I sent this buy on US 30 the other day. Market makers keep pushing price up, but as much as they keep pushing price up, they leave their pending orders as they go up. So there, as much as they're pushing price up, they keep leaving pending sales, pending sales, pending sales, pending sales. Now, to me here, as much as we have demand zones, which are telling me we have buyers here, I'm seeing this demand zones as buyers, as retailers trying to buy US 30, but I am seeing the opposite also. I'm seeing these are zones that market makers left their pending sell orders for them now to come and pick up all this other liquidity and take price to the downside. So right now, unfortunately, I do not have any bearish zones for US 30. So if we were to get a sell right now, I would base that sell off of the trend line. So for example, there's this trend line and also this sell. The reason I entered this sell on US 30 is because we had, again, this trend line has been sticking for me. So this trend line, I know for a fact that this trend line is a very, very major area for price action. So what I did for this particular trade, right, we had this hourly candle, break and close below, the hourly. Then we had the next candle open, retest the 9 EMA on the hourly and close below. So that's why I personally entered that sell on US 30. So yeah, I'm still gonna hold this sell. If it goes up, then that's fine. It just tells me when they do, if it goes up and hits stop loss, I mean, I'm fine with that. It just tells me that when they do sell US 30, at that point, I will even enter with a 5% risk if I get stopped out of this particular trade. Yeah, so right now it's more of a waiting game. So due to the news that we have later on today, expect the market or volatility to die down at around 12 p.m. You'll start seeing a lot of consolidation. And then mark up this trend line, because like yesterday, I know I was trading with Audrey yesterday on the hourly time frame. I forgot what they did. Yeah, this is what they did. So mark up, use even the high low plus trend indicator. You can easily put like pending limits, whether it's buy or sell limits. Yesterday, this was the news candle. You know what happened? They brought price. Oh, that was the wrong one. They brought price literally to this lower low and then rejected heavily up, rejected to the trend line. And then guess what? Went back down. And I know also yesterday during the live session, I did say, as much as I was in a buy, this was another sell, but I wasn't looking for sells on US 30. Same thing using the trend line. This news candle, fake to the downside, picked up liquidity, went up, but guess what? They closed below the trend line again. So for a sell, what would you want to do? You don't want to sell on the candle that breaks a trend line or breaks structure. You want the next candle to retest that trend line in this case and then close below. So yesterday, I know during the live session, I did mention I was in a buy. I wasn't looking for sells, but I did say if anybody had any confluences for a sell on gold, this is an easy sell you could have taken, and it was a valid sell. But personally, I was already in a buy, and at that point, I was like, okay, I don't want to confuse myself. But I did point this out during the live session yesterday. If anybody had any confluences for a sell, that was an easy sell, because right, you're looking for the break of a trend line, and then you want to wait for the next candle to retest the same trend line and then close below or above, depending on the direction you're looking to do. And this trade would have been a nice one, low drawdown. Yeah. Any other questions from anybody? I think my gold trade is still creeping. Yeah, I think for me right now, as much as we are in so for gold, if you look at this, where we are, for gold, we are in hourly. Let me go ahead and delete that. We are in an hourly bullish low, hourly bullish high. And also this was that slight rejection was caused by the 200 EMA. So another buy for me, another entry for a buy for me for gold would be, I can see this hourly candle closing above the 200 EMA, and then the next hourly candle retesting the 200 EMA on the hourly and closing above. So that might be a nice buy on gold, and it would align with the hourly bullish high and low. But for me at this point, given the price action, and given that we have news at 2 p.m. And I've already gotten back my money from yesterday, so I might close this trade early, but I'll see. Yeah. Any other questions? Oh, I didn't go over the breakout. So the breakout scanner, that was another entry. So I know, Audrey, you asked about the 15-minute time frame. So the only strategies that I use on the 15-minute time frame is the breakout scanner and the crosses indicator. So not to say you can't use them on the 5-minute. The reason I use them, where is that? No. I would rather this to be here. The reason I use the breakout scanner on the 15-minute is you want a lot of confirmation. So for example, right now, if I change this to the 5-minute, you might see a lot of fake outs back and forth. So let's see how that loads. And look at these gaps we're having in the market. Since the market is gapping up and down, so this is just a red flag for trading. Okay, so this is what I mean by fake outs, by using like some of these indicators on a 5-minute time frame. So if you're selling US30 here, and for me, for this one's right, 100 TP, 100 stop loss, you can see this one you would have gotten, could have barely survived. And then for this buy right here, you could have gotten into this, unless you're a scalper, maybe use it on the 5-minute. Not right, you definitely have entries on the 5-minute, but for me, the only strategies that I use on the 15-minute is the breakout scanner. So for example, like here, this sell, this buy right here, and the crosses indicator. Also for the crosses indicator, I think I had put in the strategy for that. Give me one second, it should be somewhere here. Oh, here it is. So for the crosses indicator, use on 15-minute time frame for better results. There is the issue with, so let's try this on the 5-minute. And again, just back test and see what works for you also, but this is what I don't want to see. So you see, if I'm using the crosses indicator on the 5-minute, I get a sell here, I get a sell, I get a sell, I get a buy, I get a sell, I get a buy. On the other hand, what you can do if you're using it on the 5-minute, turn on the squeeze filter, and that will take off price in those zones that price is squeezing, but you can still see you're ideally going to get locked into positions. So this one could have been at break even, this buy and sell, but then you could have made money on this sell. Yeah, but for me, I just don't want to keep getting alerts every now and then. Now, the strategy for the 15 or the workflow for the 15-minute or for the crosses indicator, use on the 15-minute time frame for better results. Use on fast-moving instruments such as indices, commodities, and crypto. I stopped trading minor pairs, even with a breakout scanner. I don't like trading minor pairs. So nowadays, I focus on US30, gold, and EU, and maybe NAS. For NAS, I've automated. It's taking NAS trades automatically on one of my accounts, so I don't really look at charts for NAS. So focus, try to learn backtest using gold or whatever is your favorite instrument. Find that sweet spot. For some people, it might be the 30-minute time frame. It might be the 1-hour time frame. So backtest and find what time frame this particular indicator works for you. Use on fast-moving instruments, preferably. Look for golden crosses, death crosses, and also secondary crosses, and take the first 3 to 4 trades, including the original cross. So for example, for this buy, the original buy signal was down here. If I take off this squeeze, so this was the original buy right here, which was the original cross. Based on the logic of this indicator, it also gives you multiple buys after the original cross, or multiple sells after the original sell. But including the first one, take 1, 2, 3, 4, and call it a day. And then wait for the next time it's going to give you a sell. As much as taking this, all of these other entries had a 98% win rate, you really don't want to push it, because right here, this would have been a red flag for me. So a red flag for me would be when the 9 EMA is again converging and being near to the 200 EMA. That is a red flag. But so long as the 9 EMA, so after a golden cross, what you want to see divergence between the 9 EMA and the 200 EMA. So long as they're going in separate directions after a golden cross has taken place, yes, you can keep taking buys. But I wouldn't recommend, as much as this buy and this buy and this buy also hit full take profit, this would have been a major red flag for me when the 9 EMA started coming towards the 200 EMA. But anyway, they had like a 98% win rate because out of like 24 trades, only 2 trades hit stop loss. Any other questions? We're waiting to see. We're going to get this trade during the live session. So hopefully, I don't think we will. I normally stop live streaming at like 11. So, and this is on the 15-minute, but I'm already in sales for US30. So hopefully we get this during the live session so that I can show you guys how to use it. Any questions from anybody else? Oh, no.
Are we gonna have, so you say you're gonna have a live session at 2 p.m.?
To be honest, I can live trade FOMC, but honestly, I'll be honest with you guys, right? We can easily make 2% or whatnot. Excuse me. The reason, and I used to live stream FOMC or CPI, and that was one of the, I remember in the month of April, that's how we have like, we had like,
don't want to risk losing your money.
yeah. And for me, I'm fine trading it. That's how we were able to make 1% during this day, but we had also lost, and this was literally CPI. Yeah, CPI. Remind me, guys. For CPI, don't use that pattern. Don't use that news pattern on CPI. Here's the issue with trading news. Personally, I know how to. I'm good with risk management. I used to not be good with risk management, but I used to be in groups where they live stream heavy news, FOMC, NFP. And then I would hear the guys say, okay, buy now, buy now. And then you'd enter the buy. And by then, right, more than likely not use a stop loss for most people. And I used to be guilty of that. And then the trade would go so heavily in drawdown, and then you end up losing for no particular reason. And then guess what? Mostly after days like this, we are going to have nice entries at like 11 p.m. tonight at like London session tomorrow. So is it worth the risk, having high blood pressure, trading for like 5 minutes, or like just waiting till 11 p.m. today and just entering a nice trade? Because trust me, after today, we're going to, like EU right now, this is a heavy trend on EU. Heavy trend. This is an obvious trend for me on EU. Let's see. Yeah, we are almost reaching, if I were to use the reversal indicator, we are almost, where is that thing? Reversal for EU. This is but I want EU to go up. I bought EU like literally at the bottom, so I want EU to keep going up. But using the reversal strategy, I do see sales coming in for EU. This, since is a FX pair, I do see sales coming. This is a point of interest right here. Horizontal ray. Then you have your 50 pips threshold right here. So this should be around 539. So somewhere around here. So not interested in any sales on EU until we achieve this target. Now, for me, I do see EU pumping up, and I think they will pump up EU during FOMC. So EU will go heavily up. So this sell on EU will be a nice reversal sell. So for me, instead of stressing myself to trade NFP, I'll just wait, and I'm really hoping they shoot EU to the upside, because guess what? When this reversal on EU comes in at like 11 p.m. tonight or tomorrow London session, it will go through. And remember, tomorrow is Thursday. Friday, we normally have either a nice continuation or reversal. So to be honest with you, instead of risking NFP, FOMC, I'll just wait for this trade. For like, this is one of the major trades I'll wait. Also, the other thing, for those of you guys who have these indicators, during heavy news, watch for the signal you're gonna get. So during heavy news, like during FOMC today, I'll be curious to see if we get a sell or if we get a buy. Even yesterday for gold, right? If I change the chart on gold yesterday, because I remember this on the live session, after, you'll see the sell signal right here. So during heavy news, just put it on a note. If you have my indicators, just make a note that during heavy news, switch to the breakout scanner and watch for an entry on US30, gold, NAS, or EU. So this was during heavy news yesterday. So this was the CPI move. It went up and down, and then guess what? Finally, chose a direction. Right, so this is also lines up with that trade that I marked up for you guys, because the logic is, what happens during news? We know what happens during news. Market makers try to trap people in both directions. So they trap both buyers and both sellers. Also, you normally have a lot of consolidation in the market. So a new strategy is either use this breakout scanner, or the news pattern that I've marked up for you guys time and time again. Use this. Use that. So this will help you avoid FOMO. No, let me draw it. Let me draw it better here. Okay, so this is my news strategy right here. That and that. And by new strategy, I mean NFP and FOMC that has a conference like today. Okay, so anytime you'll ever have FOMC that has a conference like today, or even CPI or whatnot. So any major news event. But let me reiterate this pattern itself. These two patterns right here. Use them only. These two patterns right here. Use them only for NFP and FOMC that has a news conference like today. Okay, so let's first go over CPI or just any red folder or heavy news folder. So let's not let's also include CPI in this. So if, for example, like today we have NFP, or yesterday when we had CPI or whatnot, we know that beforehand, market makers trap both buyers and sellers, right? So you can see here, there was a sell signal, sell indication, and also there was a buy indication. And also we know that beforehand, there's normally consolidation during heavy news events like those. Okay, then, so using the breakout scanner by itself, what do you know? The breakout scanner shows price breaking out in one direction or another. So when the news was released here, or this was even a little bit before news, there was a bunch of spikes up and down, faking, trapping in both buyers and both sellers. And then there was some consolidation. So what do you know after consolidation comes a breakout, which is the reason we have a breakout scanner. So you come in, you say, let the market do whatever it's going to do, instead of just risking your money, just trying to catch a quick 500 on the opening candle of news. Just wait and say, let me wait for the market makers or for the market to choose direction. Yesterday, right here, boom, get a sell entry. So you say they completed their fake outs to the upside, to the downside, you enter your sell. That's an easy, risk-free, or not risk-free, easy, stress-free way of entering or trading news. Number two, the other new strategy is using these patterns. Again, use this only for use only for NFP or FOMC with news. So for this particular pattern right here, if you guys want to take a screenshot of this. So for this pattern, during NFP or like so here's the other thing about FOMC for today. The real move will come at 2:30, not at 2. So at 2 p.m., this will be a fake out. You'll see a bunch of fake outs at 2 p.m. So right here, they'll be trapping people. They'll be trapping people in both directions. So I'm not going to trade 2 p.m. I'm not going to trade the 2:05 or 2:10 p.m. candle. I'm going to wait to trade maybe the 2:35 candle. The reason for that, here, the chairman of the Fed, Jerome Powell, will be analyzing the reason they either increased the rate or decreased it. My guess is that they're probably going to decrease it because things have opened up a lot. And but anyway, that's my guess. So he'll be talking about what happens here. So this can be a positive thing for the economy, but then he can say something that's going to be interpreted as a bad thing. So as much as the news here can be positive, he can literally say anything that can be interpreted as negative. So for me, what I'm going to wait on, I'm going to watch the breakout scanner at 2:30, 2:45 p.m. Eastern Standard Time here. And then I'll see whether we get a breakout buy or sell, and then I'll look for an entry. Also, the 2:35 candle, if the 2:35 candle is bullish, right, I would want to see the next 5-minute candle after that bearish, and then guess what? I would look to enter a buy for the continuation. If the first 5 minutes is bearish, I would wait, right? You can hop in. I know I've traded this in one of the live sessions I used to do where I just hop on to this one, but for proper confirmation, you want to wait for the first 2 steps of the pattern to play out. So if the first one is bearish, I would wait. If the next one is bullish, then guess what? I've already met my validation, and then I would enter into a sell. So same thing that happened during NFP, like what was that, 2 weeks ago? No, this was US 30. Yeah, 2 weeks ago. I remember it because I was on vacation. So 2 weeks ago for US 30, this was NFP, and I know this is on the 15-minute candle. So let me even go on the 5 minute. So you can see on the 15-minute candle is the same thing, but let me go on the 5 minute because that's what I use to enter those trade. So on the 5 minute, see, I'm trying to find, here we go. Okay, here we go. So this is the 5 minute. So this was NFP. I remember this day. NFP, guess what? Pattern, strong bullish candle. Next candle, bearish candle. Then guess what? Right here. And there you go. So that's how I would say. So, right. So long story short, that's why I really don't want to trade. I can, but right, as much as I can tell people to use proper risk management, I used to be that one person who never used proper risk management. So I don't want to have people risk blowing accounts just because of one trade. Also, we are already up like 2.5% for the month just by 3 trading days. That's even higher than the entire month of May. Yeah. Anyway, if anybody else has any questions, go ahead and ask. I'm not sure we're gonna get this trade before I end the live session. Did I send any trades out yesterday? I don't think so. I know I took trades, but I didn't send any trades out. Yeah. Any questions from anyone? So if this pattern plays out, if you don't have these indicators, what you'd be looking for is the cross to happen on the 15-minute time frame, and then you want a retest of the 9 EMA on the 15-minute time frame, and then closure below. So that would be your entry. Not sure. Let me try and mark that up. So let's say we have a cross, right? So you wouldn't sell on the cross itself per se. If you want a safer entry, you would wait for the closure below for the cross to form, and then you wait for the retest of the 9 EMA. My guess is that it will be somewhere here. And then you want the candle that retests the 9 EMA on the 15-minute to close below the 9 EMA, and that at that point you go ahead and enter a sell, and hopefully news pushes us straight to TP. So for me, I'm not going to close my US 30 trade. If it hits stop loss, then it is what it is. But the trade for me is valid. I've been waiting. Actually, wait.
I entered early, but I just used a 200 take profit stop loss.
Yeah.
Up now 300.
Yeah. Yep, there you go. Yeah, that's another thing, like using a wider stop loss. Like if we get stopped out of a 200 move on US 30, like God, you know, think of it as a probability. You know, there are just things that happen and you're like, I guess it was meant to happen to me. So don't use such a small risk. Like for me, for this trade, I'm probably risking what, 3% or something. So instead of stressing out by having like a 50 pip stop loss and TP, like I'm like 200 pips. If I get stopped out of a 200 pip move on gold and US 30, then I guess it's just one of those days. Now, I'm not going to, so previously when I was doing the live sessions, I know my standard TP and stop loss for gold was 50, 50. Same for US 30, and also for FX pairs was 20-20. Nowadays, I'm trying to move away from scalping, so I've gone ahead and doubled that. So nowadays, my TP and stop loss for a regular trade for US 30 is 100 pips, TP and stop loss, and same thing for gold, 100 pips, TP and stop loss. For FX pairs is 40, same thing I sent for Euro GBP. The reason I'm doing this, I want to take lesser and lesser trades and high quality trades. So if I have a high quality trade that has a 90% win rate, like here's my logic for using a wider TP and stop loss. My logic is if I have a 90% win rate or 90% probability for this trade to hit, if I have a 200 pip TP and stop loss, if US 30 comes up 200 pips, guess what it has to do? It has to close above or it has to break the 9 EMA on the hourly. It has to break this trend line on the hourly. It has to break this structure on the hourly as well. And then it has to come up and take off the higher high. So does that make sense? So the probability of this hitting before my TP hitting, right? If it happens, it is probable, but if it happens, then I'll be like, good job, market makers. You got me on this one. But and guess what, for me, for this trade, in like 1 or 2 days, I'll be up like 4% or 3% instead of trading 10 trades a day. And just at the end of 4 days, I'm either down 2% or 1% or break even. So just with this one trade alone, in 1 or 2 days, I'm already up like 3% or 4%. So yeah, so that makes, to me, that's a no-brainer for me, and gives me more time back during the day. Yeah, I don't think this is going to happen during the live session. So yeah, anybody else has any last questions before I end the session? Okay, yeah, so just trade safe during FOMC. At the very least, wait till 2:45. And look for an entry there, or wait till like 11 p.m. Eastern time tonight, or like 2 p.m. tomorrow before London session to catch a nice move if you are not already in. Which trade? So today I only sent the Euro GBP trade in the Discord. So yeah, that's the only trade I sent. If I get a trade during NFP, I'll go ahead and send it out. Yeah, unless if you guys want me to stream, I think I can. I'll see if I want to stream, if I have, because I gotta do some other things. But if I do decide on streaming, I will let you guys know. Let me see, for US 30 on Death Cross, are the big. Yeah, and we can arrange for so I don't know if Steven is here. Let me know one of these days when you're free. Maybe tomorrow you can run the live session tomorrow if that works. So tomorrow, if Steven is up for it, he can run the live session. I know you guys have had a bunch of questions for him, so he can run the live session tomorrow. So yeah, we'll send that in the group. I'll talk to Steven, and then if that's doable, he'll run the live session for tomorrow. Anyway, I'll see you guys hopefully later, if not tomorrow during the live session. All right, bye guys.
Thank you.
All right.